Hey everybody, how's it going? Hopefully you're bored enough that you're just ready to learn anything. Just give me something to do. Hopefully you're ready to go, do some accounting, and hopefully you didn't blow off the entire 2-week shutdown period, because we're not going to spend as much focus on these two topics, receivables and inventory. What I am going to do though is kind of tell you heads up what's going to happen. So as usual, as you can see up here, our syllabus, it may look a bit different in this video than it actually does at this moment in time. That's okay. Things are going to be flexible. So don't make a copy of it. Use the live one that's online because it's going to change. So what's going to happen is, to make sure so I can keep track you're not falling too far behind, there's probably going to be a bunch of Google Forms where you submit some answers, do some things, maybe even throw your assignments in through those Google Forms, right? So that I can see if you're keeping up. They won't all be marked, but they'll be used for attendance, for example. So do those, check the calendar for what I want you to do, okay? If it's whited out, there'll be some rows that get whited out on the syllabus, or I'll say, hey, listen, we're not going to do this. We're just going to focus on the core stuff, and the rest we don't have to do unless you really want to. So probably what's going to happen here this first week is I'm going to give you a little assignment on receivables and inventory, kind of a knowledge thing. It'll just be like one sentence or so answers. And what I want you to do today, starting today, is make sure you've done some of these practice, right? The solutions for both the receivables that you can see here, the receivables and the inventory down lower. This view is terrible. Let's make that, there we go. So receivables and inventory, if you haven't been through those, go through at least the slideshows and PowerPoints. In this video, I'm going to highlight what really matters in receivables, and there will then be another video to go through what really matters in inventory in a day or two. However, it'll be on the calendar, right? So later in this video, right after I'm done blabbing my mouth right now, I'm going to go through some of those things. But here's what I want you to do once you've watched this video, right, and tried some of those exercises. I want you to prepare for this little assignment that's coming this week by doing, and you can see both of them. You can prepare for both inventory and receivables. This quiz right here, there's going to be a quiz. That's what I'm talking about. It's not going to be like a quiz. It's going to be an assignment because we're not in the building together. The practice questions, though, are the basis of the quiz. So have you seen that before? So I'm not going to change any of these questions. These practice questions, these multiple choice questions, are what I'm going to use. Same ones, right? Because they covered really the most important ideas. It's not going to be multiple choice, but it is going to be those questions. So here's what I mean. For example, this first one, way up at the top, interest is usually associated with blank. Right? So if you use this to practice and you don't know what it is, it'll tell you the answer. In the assignment, I'm going to ask, for example, I'll change it into a short answer question. So it'll still say interest is usually associated with B, notes receivable. Explain why this is true. And so now you have to come up with an original, unique answer in a sentence or two. Right? So we're switching it around. So instead of just raw knowledge, it's going to be really understanding. Same category, but a bit different because we can't do multiple choice when you're all over the place and you can just look it up. That's stupid. It's meaningless. So we're going to do it that way. So in other words, still use these quizzes, these practice quizzes, to practice for the assignment, right? So you can start that as soon as you want. Okay, so what we're going to do now is we're going to move into what I want you to get out of the receivables topic. Got it? Okay. So before we go any farther, make sure you watch that video on how we're going to do our learning and you fill in this form. See in the purple where it says attendance, complete form 1. Make sure you've done that. Only 2 of you have when I was making this video. Hopefully it's everybody by the time Monday's done. So let's talk about this. I'm not going to do the lesson I did before we went away for March break. So if you're really lost, come to a live chat or send me an email. Got it? So what we're going to start with is essentially, what do you need to get out of the bad debt section? We're going to start with this right here. This bit, direct write-off allowance method. That's essentially what I did before we left. And the biggest thing to get out of that was how to actually, because the rest is more or less grade 11. How do you do bad debt? 2 steps, the allowance and then you actually write it off, which means you erase it. And it's done in those 2 steps. Key idea. It's done in those 2 steps so that you can take as long as you want to do the second step. Right? The first step, when you make the bad debt allowance, affects your income statement and your balance sheet, and the second step affects nothing. Right? That's the main idea. The new learning that was key was how to actually value it. Right? How do you come up with the amount that is bad debt? And there were 2 methods. There's a percentage of sales, right? Which means you tend to record it in the period where you had the sales on credit that created the bad debt. So it's better that way. And then you have the other one where you actually look at your aging receivables that are overdue and you sort of figure, okay, who's really not going to pay us? And so that method might not happen in the period where you had those sales on credit, but it tends to be a better representation of who won't pay. So in other words, it's better at valuing your assets on your balance sheet. And those were the 2 differences. That the most important thing being that aged receivables method, you figured out how much was bad, and so you have to try to get your allowance account up or down to that right level with your entry. Instead of saying, okay, all our credit sales, 1% is bad, boom, just figure out what 1% is and add that new expense. Whereas the aged receivables method is trying to get the account to the right balance, whatever that takes in your journal entry. Got it? Okay. The second part right here, notes, receivables, all this stuff. I'm going to tell you what I want you to actually know. Let's visualize this. We're going to do my best to visualize this, and this wasn't even working a day ago, so let's see if it's working now. And yes, I waited for the actual recording, the moment I was recording, to do this. Oh, okay, here we go. Here's what I really want you to get out of this. I think you can handle journal entries, creating receivables, paying them off. Just the logic of a flow and the decisions you would have to make about what to do. Essentially, if you have a sale and it's not for cash, then there's really 2 things. There's a few things, but there's 2 in this course that you learned about. It could happen. It could become an accounts receivable, right? And if not, it could become a note receivable like this one. It could start off that way, either way. Also, if either of them is not honored, so in other words, each of them could turn into cash. So if the note receivable is honored, it could turn into cash up here, right? You get payment. Same thing with the accounts receivable right here. It turns into cash. Now, either one could also result in it not turning into cash. If it's obvious while you're holding a receivable, either kind, it's not going to be paid, you can immediately make an allowance for it. So an allowance for notes receivable, an allowance for doubtful accounts or doubtful notes. Either one you can do, right? And so it becomes bad debt right here. If your account receivable is not honored, but you think it will be, they just need more time and it turns into a note, then you convert it into a note. It can become a note receivable. And then if it's paid, it can go straight to cash again. Same thing, right? Understand that this one, though, here's the one thing that you don't have a choice over. If the note receivable reaches maturity and it's not honored, you might write it off very soon, but the first thing you have to do is turn it back into some type of receivable, like an account receivable or short-term receivable, because it's a contract. When it hits expiry, it's no longer a negotiable contract. It's terminated. It no longer exists. So you can't have a note receivable or any type of debt instrument that has basically a day of death, a day of termination. You can't have that on your balance sheet if that date has gone by. So if the note reaches maturity, it must be turned back into some other type of receivable. In this case, an accounts receivable. Then you can worry about bad debt expense or writing it off. All right? And that's really it. That's the flow. If you can keep that straight in your head, you can figure out what to do. Okay, then. So that's about it. That's all I really want you to focus on for this first day or two, right? Because we're only doing about 3-ish hours a week of instruction. That's our goal. Without, distractions of people in the table, you should be able to handle this if you haven't started. I know a few of you have actually done some of it. So take a look at that, review, head for that receivables practice quiz. Okay, and if you don't know how to do some of these big ones, essentially head for the problems, right? Shorten your time. So in other words, right, so look up at these P ones, right? This one like P9, 3, and the Ps. If you can do these P ones, the problems that are a little bit more involved, and you seem fine, then you probably have the main ideas, right? So then work on the practice quiz. because I'll give you that one in a day or two. I might do it. I'm probably going to do both at the same time. The inventory and the receivables. I might take 3 or so questions from each of those multiple choice ones and give that as an assignment to you. Right? So that's where we're headed. So next video, which may be tomorrow or the next day, depends. I wouldn't mind some feedback from you guys. Let me know how much you did get done, right, over those 2 weeks, and how slow we should approach this. So at this point, I would like by Wednesday these receivables to be pretty well in there. All right? So again, questions, problems, let me know.